Good evening, traders. It's Samurai Trader. Welcome to a recap of the FX market. I've just come back from running a traders boot camp where we were doing live trading for 3 days, and we just covered some really interesting facts that I just thought I'd quickly cover and record for some of the traders that were present at our boot camp. Now, a couple of things there. Of course, by subscribing to my YouTube channel, you'll be kept up to date with some of the world's best trading strategies, totally free. Of course, when you want if you want coaching and one-on-one work, of course, then there is a fee. I charge $297 per hour for that. Many of my professional traders only need 1 hour and they're away. So we're going to cover a lot. So moving on, I should say, moving on very quickly. Here's what I discovered some years ago. I've now trained hundreds of traders, and I deal with probably around 20 traders every week, either existing clients or new clients, or those that I'm giving one-off-one training with, others that I do on a regular basis. And this is something I like to quickly talk about because it's really relevant to when it comes to trading. One of the biggest challenges I face as a trading coach is dealing with the psychological damage caused by previous trading endeavors. Now, have I lost it? You may be thinking, come on, Samurai, what are you talking about here? Well, one of the greatest challenges I have in dealing with experienced traders, or those that may have blown their account 1, 2, 3, 5 times, is that they have a set mindset and they become psychologically damaged. That is, when they go to pull the trigger, or in being open-minded enough to look at a new setup, whatever, they tend to be really closed-minded. If you've blown your account a number of times, if you've been trading for a period of time and you're not making the money that you wish to be making or expect to make, you need to wipe the slate clean and go back and start again. Now, as an example, we're about to go through 4 or 5 different trade setups that we trade on the FX markets. Now, one of the challenges I have, and if you've watched a number of my YouTube videos, you'll hear me talk about this, is that very important, you start off and you master and you own one trade setup. Remember, trading gives you financial security for life if you master it. However, what we do know is that over 92% of traders fail because of greed, because of impatience, because of lack of discipline. A huge one, and we just saw this for the last few days, is some of the traders in the boot camp continually wanted to counter trend trade. And that's a real issue, because when we look at many of my clients that lose their accounts and lose money, it's because they're counter trend trading, they're moving their stops, they're trading 4 or 5 different sorry, I just had a trade setup alert. They're trading 4 or 5 different trade setups without having mastered one, etc. So how do we turn you into a professional trader? Well, this is something I've got up on screen, is that every professional was once an amateur. Every master started out as an apprentice. I want you to go back to school. I want you to go back and find a trend following trading strategy that you feel comfortable with. You know, trading is not meant to be exciting, traders. It's not. We get impatient and we start to see things on the screen that are just not there. Is that trading is a game, a strategy. What changed my life is I become a sniper. I become a trading sniper. That is what I want you to do. See, my passion for you is to change your trading results, because 90% of the traders I initially deal with have lost money, or they're losing money, or they're brand new. And if you're a brand new trader, I'm going to talk to you and train you about just sitting back, and you're a sniper. You're disciplined, you're patient, you know your prey. And that was another key thing that come up on the boot camp. How many traders are still trading using 4 or 5 different screens? They're tracking multiple time frames, multiple markets, and they're a master of none. And I don't know if you've heard the old saying, jack of all trades, master of none, but it's really applicable. So this wasn't meant to be a psychology session, hence you can just see I've just quickly put up a couple of slides here. It's we're not full screen on the slides, but some really valid points. I'm absolutely committed to your success as a trader, whether or not you come to me for coaching or not. What is really important for me is that you succeed. I want you to send me an email and tell me your success stories after you've watched the training videos that I post. Of course, if you're interested in my coaching services, please contact me directly. Now let's move on. So let's move away from the advertisements and let's get straight into the trading. So let me just have a look here. So what we're looking at today here is the euro dollar, the FX market, the currency market. We're looking at a 5 range chart, a 5 range. I trade also the 8 range and the 13 range. I personally like range charts. Many traders of course use time-based charts. There's all sorts of different types of charts. You've got to find a chart that you feel comfortable with, just like trading the different types of markets. Each market has its own personality. For an example, if I was to flip over right now to the Aussie dollar, Aussie dollar, US dollar, you'll see it's totally different to the euro. You'll get a lot more volatility, etc. But the euro's got fantastic volume. Now if we have a look here, we've seen that the euro dollar of course has been in a fairly steep free fall the last week, and there's fantastic trading opportunities there. But what I still saw at the boot camp was in strong downward trends, the amount of traders, because of the patterns that appear on the screens, try to counter trend trade. For an example, if we look at this little pattern here, now remember what trading is really about. It's about a pattern solving exercise. That's really what we're looking for, traders. We're looking for patterns in the market. The market has a memory and patterns repeat themselves every single day. Now let's look at a pattern that fails more times than it wins, in my opinion. It's this one here, a counter trend trade, and this is something that traders were doing continually. If you're not ringing the cash register profitably, I can almost guarantee you're counter trend trading on a regular basis, or you're moving your stops. Look at this one here. Okay, we've got a high or low on the platinum. Of course we can see we had a little kick up and it failed, but look at this downtrend we've got, and we'll see this patterns all over the place for counter trend trading. Traders, one of the things I'd like you to do, if you're not making the money, if you're not achieving the financial goals that you wish to achieve, stop your counter trend trading right now. Oh, you can say, but what about this little one over here? Yes, there's a good 12, 14 ticks after the spread in this particular move. Remember, these are 5 range candles here. Yes, that's great, but of course I'll show you a ton of them that have failed. Look, we've got a 0 line cross right here, but it was good for 7 ticks. Forget it, traders, run with the trend. So let's have a quick look at this here. We've got a range of different types of trades on this chart. We've got T69s, 18s, 25s, T1s and T2s. So to quickly look at some of these, one of the qualifications for newer traders we always wait for is, we can see here we've got our 0 lag MA right here. We wait for it to change to magenta in a short. So we can see here it's gone from cyan. Here's our entry. As much as we had a T2, which is a slingshot trade, which is a fantastic trade setup, of course we can see our long-term stochastic is oversold. We've pulled back, we've rolled over. Our newer traders would not have entered until this candle here, but look at this, is a good 30 pip move. For our experienced traders, you would have been in on this one because you're going for a high return on these trades, of course. Pardon me. This is also a T25 setup. A T25 is where we have between 2 and 5 candles pull back, then we get a reversal candle back in the direction of the trend. So we had a T25 right here, T25, oh, that's a borderline T25. You're already in this trade anyway. A T25, a T25 again. So if we looked at this one, you were still in, even though you had a little double top with the trends here. Your T25s are one of the most profitable trades you'll ever trade. That is, you have 2 to 5 candle pullback, a retracement, and then you continue with the trend. Here the experienced traders were not waiting for the zero lag. Now with the T25, of course, you're also going to have a higher profit target. Why? Because you're in at the close of this candle. You're in there, you're in there, you're in at the close of this one, so you've got a higher profit target. So at times your win-loss, your wins may be down comparison to your losses. Well, when I say wins down, you're always going to be winning 70 to 80%, but you've also got a higher profit target. Now let me just scroll along. I just put a couple of comments here. Now one of the things that is a challenge for every trader is, when do we know that we're in chop? Well, there's of course many indications to and this is something that I personally use. Once again, traders, I don't have all the answers. I've been trading now for over 20 years. Fortunately I've had research teams work for me. I'm currently working with two brilliant guys out of the US. Absolutely, John Shealy, one of the best traders that I know of, and programmers, and another gentleman called Tom Brown. And you know, I've just got access to these fantastic resources, some very talented people. But getting back to the point here, this is something that I use. And of course, if I was talk to Tom and John, they both use different things. So we all have indications that, or indicators that we like to use. So notice here my channel here is going sideways, and my zero lag is basically caught within the channel, along with this dark blue line is called the trigger line. Now notice here also down the bottom here, the long-term stochastic is sideways. All right, instead of being oversold or overbought, it's traveling side. This is a really good indication that we're in chop. So you want to be very careful. But one of the key points I wanted to bring up here is, you can see the paint bar that keeps appearing. These are the super scalper, the T1s, and trading with the trend, they're an absolute winner. All right, now if we look here, we've had a pullback. Once again, we go into a bit of chop. We've had a little bit of divergence here. But if you also look at here,
strategy alert.
and I'm going to have to go and take traders. I'm just going to put you on hold because I've just got to put a trade on. I'll just be one moment. Okay, traders, thank you. Had to get that trade on. So we can see here our cyan line here is our 89 EMA, and let me just move that back one. So you'll get bounces, and that's another great thing about Forex. If we say compare the Forex market compared, say, to trading the E-mini, you'll get a lot of false breakouts on the E-mini because of the floor traders. You get a lot of false breakouts. You tend to find, of course, that with Forex it'll trend a lot more often, but you want to get to know, as I mentioned earlier, the personality, because every Forex pair is different and has a different set of behaviors. So we can see here we've got just some fantastic trends here happening on the euro dollar particularly, and once again, as I mentioned earlier, I love the range charts. Here we can see here T1, little double top here, T1, double top T1, etc. So getting back to this here, that the Forex market trends beautifully. Yes, we can say, look, here's a nice counter trend trade, that one worked, but many of them fail. And recapping some of the key points is that make sure in your business plan, your trading plan, that you've got very firm ideas, very firm target on your stops. What is your stop? What is your target? Remember, stick to your trading plan. Traders, I have to go because I've got this trade happening and a few things happening there, so I'll post this on YouTube now, but we can just see here that the euro dollar is just a fantastic market to trend trade. It really is. Before I go, one more thing I've got to mention for T69. For T69 is the break of the channel, and I just saw an email as a reminder. So we can see here my 21 EMA channel. When we break the channel, I have an entry signal, but I prefer to follow it with the trend. So I had an entry just here, a break of a channel, we pull back. You still would have been in this channel, this trade, sorry, another break. Now of course, an added confirmation of a T69 is what is the zero lag doing? So we can see here the zero lag is also confirmed the break of a channel, so you're in. You didn't enter until this one here. Your stop was above here. Likewise here, your stop was up here. The T69 is a highly accurate trend following strategy. Here, here, here. I want to see a decent pullback. You were still in that trade anyway. Here it is again. Once again, you already would have been in this one because you're 89 bounce. And look, just notice these. Here's a 200 bounce. Here's an 89 bounce. Here's an 89. Here's an 89. Do I have to go on? These 89 bounces, almost an 89 and a 200 bounce, they provide fantastic support and resistance. Another 89 200 bounce. Here's one here. So traders, and this is also a T2. I hope this has been useful. Sorry if I've covered a lot of information, and I'll see you on my next video.